All right, everybody. This is Keith Harris, the Forex trader, also known as the Forex Gooch. I'm online right now, and starting this meeting up. Just started recording. If anybody has any issues or concerns or whatever the case is, some pairs you want to look at, let's go over it. Can everybody see my screen?
Yes.
All right, cool. Now, all this here that I have on the screen is the 4 and the 50. Y'all see this? This is the 50 line, right? The blue line.
Yes.
And y'all see this is the 4 line, right here. EMA. The strategy is when this 4 line, this orange line, crosses the 50 to the downside, it's in a sell, especially on the 1 hour, 4 hour, and the daily. Y'all see that? Has anybody been using that?
Yes.
Have you been having success with it?
Yes, I have been actually.
Okay, who's that? Stace?
Yes.
Okay, cool. All right, so Janice, you said you wanted me to go over the Teacup.
Right.
Okay, what pair you want me to look at?
My favorite is DJ.
Okay, so here we go. So you got let's see here. Did the Teacup here? Let me see. I got bullish, bearish. I got a lower low. Yep, it came right back. It came back here, touched the line here. It did a drop, which continued to drop, which continued to drop. Y'all see that?
No.
Okay, so I have a bullish candle followed by a bearish candle and a lower low or lower high. It left the zone. So the next time it comes back and hits this line right here, this red line where I drew it at, it should ultimately drop. So let me see. Let me zoom in right here. Did that hit the line? Right there, it looks like it hit the line. Then it dropped. Then it continued to drop. Y'all see that? Anybody confused about that?
Right. That's
So
Yeah, I am. I'm definitely confused on that because it doesn't look like it dropped to me. It dropped a little bit right there, but it consolidated and then
it dropped. Then you had the 4 across the 50 to take it down. You see that?
Okay.
So it touched and then it dropped, right? I said, get it for 20 pips. So from here to here, it went down 48 pips. Then you had the 4 across the 50 right here. And it kept on. It went down as far as 132 pips. Right on this candle right here. Y'all see that?
Yeah, but what candle initiated the Teacup from the initial entry?
Right here where I got the yellow.
No, the original.
Oh, right here is where I did a bullish bearish. Bullish bearish, low, and it dropped, right? But then it came back here, and this is the initiation. This is when the trade took live. Because you had the bullish bearish, then you notice that it was going down. You put your horizontal line right here. And you put a sell limit at this number. Sell limit at 1.37. No, at 137.140. So the next time this trade came up and hit this line, which was at 137.140, it activated the trade. It put you in the trade, which was a sell limit. So what a sell limit does is it sits here and it comes up. The trade comes up, hits that line. It may go up a little higher and then drop. That's the selling part. You get it?
Okay, I see that. So
Okay,
it could be
so
any bullish bearish candle as long as it has a bullish bearish and a lower low.
bullish bearish, lower low, and it's leaving the zone. This was the zone. This red line marks your zone. right? It marked the zone and it left, right? It came back up here, put you in the trade, and from this point to this point right here was about 49 pips. But it kept going down. And here, it pulled up here, right? You would have stayed in profit and then continued to drop down to this point, which from this entry up here to down here is about 132 pips. And the reason why I say it went for more pips is because the orange line crossed the 50 line to the downside. It came back up, but it still continued down further. Y'all see that?
Yes.
Okay. And here it came up again, right to the same line, 137.140. It came up, activated the trade on this candle. That candle right there, this one right here, activated the trade. Y'all see that?
Yeah.
And guess what happened? It dropped. Did it give you your 20 pips? Let's see. From that point to here was 69 pips. It went as far as about 86, 87 pips. Somewhere in that range. 85 pips from the line. Do y'all see multiple strategies within this strategy? Yes or no?
Yes,
Yeah.
we do.
Okay. So it came back and hit the same line, that same sell limit line again, and it dropped. Right? You was already in it. Let's say you got out here, or it got you out right here because it pulled back. Then you had the 4 cross the 50 to the upside. You could have took the buy from here and took it right there. It is respecting this line. Y'all see that? It's the third time it done came back to this line from when I drew it. Here's where I drew it from. 1, 2, and here's the third time, 3. Y'all see that?
Yes.
Multiple strategies within the strategy off the 450 cross. Now, let's look.
Good. Can you show the entry point when when you say it crossed to the upside?
Right here. The 4 cross the 50 right here to the upside. That's one. Another one's right here. This orange line crossed the blue line to the upside. What also tell you that it was in a buy? How I have the parabolic czars under the candlesticks is going uphill. And it went up right to this number. So you could have got in a buy and put your take profit right at this number, which is the same number, 137.140. And you would have got out on this candle. If you didn't get out on this candle, definitely when it went up here, it would have got you out of that buy. Because it gapped. That was a gap right there. Jump way up there. You definitely would have got out excuse me, in profit right there. Look how many times this trade has come back to this line. That could have activated you in that trade again, and look at the drop now. Look at that drop. That drop's crazy. It's still the same 137.140. Y'all see that?
Yes.
Yes.
And the last time, this time right here, 195, 196 pip drop. Still off that same line, 137.140. And you had the 450 cross, which was more confirmation to get in there and bang it away. Is this making sense?
Yeah.
Anybody confused? Anybody with some questions, some concerns? Who else?
Yes. Question.
Dr. Courtney. Yes, who has a question?
Diane.
Okay, what's going on?
So the question is, I know you used the Fibonacci the last time to show how to get out the trade. Can you just show that again? Like, at what point would you know to get out? I know you're writing it down.
Set a trailing stop, or if you're doing that, then set 20 pips from the entry. So 20 pips from here. So let's say you wanted to know how much was 20 pips. We can go in here. Y'all saw where I got that from, right here, right? So, let me erase that one. The one I want is the short position tool. So I can place it anywhere, come here, click this here, and go to coordinates. And I'm gonna put in 137.140. And how many pips did I say that your stop should be? Anybody remember?
For 1 hour, 25. Oh,
Right, we're on a 1 hour. How many?
30. Oh, 300. But yeah.
Yes. So
30.
you put 300 right here. So it's 30 and a 0 for the ticks. And my profit should be what? How many pips am I trying to get?
25.
25.
Safe number is 20. Because sometimes it'll get to 20, it might get to 22 and turn around. So safe number is 20. So that's why I'm telling y'all now 20. So
Okay.
I'll put 200 there, and I do just like this. And guess what? I come back in here, and this is my original 137.14, and they take off the 0 because it's after the point. This is 30 pips away. This is my stop loss right here. See, it says stop level ticks. That's my stop loss number, 137.440. And this here is 20 pips away from this number. This is my take profit number, which is 136.94. So if you wanted to know, well, where do you get out of the trade at? 136.94.
Mm-hmm.
And from here, it would have got you out the trade right here. It would have got you out the trade right in this area. As soon as it passed here, this candle right here in particular would have got you out the trade. Boom, you would have got your 20 pips and been done. And then you notice the 4 across the 50, take it for a ride. There you go. Questions, concerns? So this is what it did. What is wrong with this thing? It's acting crazy. Oh, here we go. Oh, it's not running. It's not moving. Anyway, I'll turn it off. But what I was gonna do is, put some writing up here. But that's the sell limit right here at this number, 137.140. Let's see if it came back up there. No, it didn't. Then we had the 4 cross the 50 down again. We could have got pips. Right there's another 60 pips. It went as low as here. So let's see. $89 pips. Then here we go again. What's telling you that it's in a sell? Well, the parabolic ZARs are over top, and these candlesticks are riding under the red line or orange line, however how you look at it. This here is a pullback. This here is a pullback. Y'all understand that? When I say when it pulls back, after this finishes pullback, then that's an optimum entry for another sell. All the way down to this candlestick right here. Y'all see that?
Yes.
So I want to teach y'all how to be very proficient in recognizing the teacup as well as recognizing when the 4 and the 50 cross. Here's where we are currently, waiting. When somebody says that they want to understand market structure, well, which way is this trade headed? To the upside or to the downside? Let me get rid of this.
Downside.
Huh?
Downside.
Exactly. Downside. So you can come, let me see. I would do this on a higher time frame. Let me go to daily time frame. Let's see what we're rocking with. Oh, look at that. Now, any other questions right this second? Questions, concerns?
None right now.
No, I got it, Coach.
Y'all good money?
Yeah, simplified.
Now, I drew this way back here, didn't I? Where did I start it at? I drew it on a 1 hour. So on a 4 hour, oh man. Yeah, let me go back to the 1 hour and look. We're gonna go look for some more teacups. All right, that was at 137. Oh, this thing is acting up. It was at 137, 140. Somewhere about there. Now, I'm going to the 4 hour. Same pair. Where's the chart at? You ever can't find the chart, you go back down here and you touch that little half a circle and it'll bring you right where the chart is.
Okay.
Okay? If you can't find the chart for whatever reason. Okay. Let's see some more teacups. Give me another pair.
GU.
Okay. Anybody spot a teacup?
Yeah, right there.
Where?
Yeah. To your left.
To my left? Where?
Left. Keep them moving right there.
Where, here?
Push bearish, lower low. Then
Okay, so.
draw the line off.
I see one to the right.
Where?
Keep going to the right. Keep going. Keep going. Right there. There's the bullish, the bearish, and the lower low.
Yeah.
Okay. Was there one before that?
Yes.
Where?
Right.
Left.
Right there. Yeah, it's the one behind. Yeah.
By the 12.
By June 12th.
Right. Keep going.
Ish.
Tell me where to stop.
Right to the right.
Right there, right? No, you just passed it.
Yeah, between the 12th and the
Here?
13th.
Yeah, that's
No.
one right there.
No.
3 candles to your right.
1, 2, 3. Here?
No.
Yes.
Somebody saying yes.
Diane said yes.
But
That's a
isn't
teacup.
this bullish, bearish,
That's a teacup too.
lower high?
But then the next candle after that was a bearish, was a bullish.
Listen to the instructions. Bullish, bearish, lower low or lower high, leaving the zone. Isn't this a lower high?
Gooch, I think that if there's one on between June the 12th and June the 13th. On June the 12th, like almost on it, there's the bullish green candle, and you have the doji, the bearish candle, and the
Right here?
yes, sir. That right there.
So let's go with the one we was first looking at. Right here, right? We have a bullish candle followed by a bearish candle. We have a lower high, and it left that red line zone. It put us in the trade, probably in this one, but definitely in this one, and then for the drop. Let's see, in this short of a move, did we get our 20 pips? From the line, yes, we did.
It just seemed like it's a longer move, though.
Because we're on a 4 hour. You see that?
I mean, you would have to wait a whole another day and a half for it to do something.
Huh?
You would have been out.
But understand, the longer the time frame, the more the pips. Let's see. Where else? You said somebody said here?
I did.
Okay, so let's put a line there. Left the zone, came back, hit the zone, went up for a little bit.
Well, it would have been out because it's more than 25 pips.
Right here. So this here, let's see if that's more than 30 pips.
It is.
21. 21 pips as high as it went up. So you still would have been in that trade. Now, let's see, did it drop
25 pips,
from here and give you your pippage? It dropped down with this tail right here on this candle, 34, 33 pips.
Mhm.
Y'all see that?
You see, they got the
Yeah.
pippage, yeah.
Yeah.
Okay. This looks like bullish, bearish, lower low. So you can mark it here. If it ever comes back around in this range again, that's when you start looking for this one. I see a bullish, bearish, lower low. Left this zone. The next time it came back in this zone was this candle right here. That candle right there, this one right here, that would have activated the trade. And then look. Oh, we got about 10 minutes. Then look at all that. The lowest it went down right where we can see it is 254 pips. Once it left this zone, you could have put on a trailing stop. And let it run. Once you in the trade, you can turn around and switch the candlesticks to the Heikanashis. Here's the trade right here, right? Once it left that zone, here's the trade. And if you're going to put on a manual stop, so for the stops, I'm going to put in a horizontal line, right? I'm going to change the color for the stops. So let's say you got in up here, you're in profit, it drops down to here, right? You put your first stop loss right here. You start bringing your stop loss down. After this candle completes and it's right here, this one begins, then you bring this stop loss right here. As it's continuing to make this candle, you bring your next, move your stop loss right there. When it makes this one, where this one here and it finishes and starts this one, you bring your stop loss right here. Y'all see how y'all keeping y'all profit? As it continues to go down, you just move your stop loss. But you can tell something was happening right here, right? Y'all see how it did wick here, wick here, wick here?
Yeah.
That's telling you that there is some sort of support right here because it's far too many wick entries right here. Far too many wicks right here in this area. Right? So if it's so many wicks in that area, you can say, hey, what's going on right here? Let's wait till it clears this here, then I know I'm in the run. If it clears this here, I know I'm in the run. Right? I know I'm in the run. Definitely once it's down here, I know I'm in the run. Still running. What else tells you that it's still in the down? Well, I have my 50 curving down, and I have this 4 and this 50 getting wider apart from each other. See how wide it gets? When they get real wide away from each other, it's really in the run, going in that direction. More of the separation between this EMA and this MA means it's further going down. And as it continues to go down, you can just continue to move your stop loss. It never came back above here, but you started to see wick here, wick here, wick here. A lot of wicks in this same area telling you what? It's slowing down, lost momentum. So what you do, you box this stuff up, box it up and wait for it to break out of the box. It breaks out of the box right here, you're on the run again. This trade started losing momentum, and then it went into indecision. And as you all know, when it's an indecision, You come and we box up indecision. And we wait for a breakout. This candle right here broke out of the box and it closed below the box. Can y'all see that?
Yes.
You see how it broke out of the box, closed below? So you don't get in on this candle. You wait till it's, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, and it pulls back. When it pulls back here, this is where you should enter, right here on this candle. Then allow it to go down. Y'all see that? But y'all see how far this EMA and this MA are apart from each other.
Yeah.
So at your original entry, back up here, bullish, bearish, lower. At this one right here, you've been in profit since here all the way down. You just stayed in profit. And then when it pulled back, you could have fired another entry. And kept going in profit. And this is on a larger time frame. So it's a way more pips.
And then Gooch, I think you could probably just stack trades too.
Of course you can.
Well,
What did she? I'm sorry.
You said
I missed
about
that.
stacking trades. That's 296 pips, 98 pips. So instead of getting 298, which is roughly 300, if you put 2 trades in, you'd be at 600 pips. 3 trades, you'd be at 900 pips in the same move. Y'all get that?
That's awesome.
Yes.
got it.
I need y'all. Who on this line has a list that they have selected?
I do.
Who's that?
Stacy.
Stacy, you have a list. Who else has a list?
I have a list as well. This is Jane.
Janice. Mary, do you have a list?
No.
I need you to go and select the list, Mary.
Okay.
And the reason why I'm saying this is everybody as a team, we are all counting on whoever selects the list to let us know when the 4 and the 50 cross on your particular pair. So everybody can go to it, look at it, and then jump in on the H1 or the H4 time frame.
Okay.
Just imagine if you got in this move that somebody called out for the 4 cross of the 50 right here. Right here. The 4 cross the 50, and you let everybody know the 4 cross the 50 right here. And they went and looked at it. It pulled back a little bit, but ultimately look at that. It wouldn't matter even if you was at work or whatever the case is. If you got a signal in the chat that said, hey, look at this, look at that, you can go look at it, verify, and jump in the trade. No longer should we be missing these major pips.
You know, Gucci, is it possible that whoever verifies it can put in the chat, hey, you guys, I verified it looks good? Because sometimes people, and that's what I'm noticing too, is that people when they're at work, they may not have the time to verify it right then and there. They may see it crossed on their phone, but of course it's not, you can't verify it on your phone. You have to actually be in front of a computer. And I know sometimes it's hard for people to get to the computer right then and there to verify it. So whoever verifies it, if they could just put in the chat, hey, you guys, I verified it looks good, or no, it doesn't look good. There's some resistance or support there.
Well, you can, but then the person becomes really dependent on your soul analysis. And they're going to start jumping in blind. And what if somebody doesn't see something that they should have saw? You know what I mean? And you jump in a trade and you jump in with a heavy lot size, and maybe they were having an off day for whatever reason, or maybe something happened that they couldn't see. But you're in the trade now, basing all your knowledge on somebody else's analysis without you looking at it first. Now you got a problem. Now you're sitting there hoping and wishing that it goes in that direction. You're sitting there hoping and wishing that there's no news on the trade. So that's why I say, even with a trade that I put out, go and check it and verify. Make sure it's happening.
Gooch, I think that was our lessons learned from the like US 30 conference. Instead of taking that,
I'm sorry. I
we
ain't
should
mean to
have
bring
been
that.
verifying before we jumped in.
Right. I looked at it and I was like, I don't know what they're looking at, but I'm not getting in that. I said, maybe they know something I don't, but what I see, I'm not getting in that. No way.